Retail sales fell 0.4% in March, which wasn't supposed to have happened. Economic forecasters had penciled in a rise of 0.2% because the economy and inflation are strong and rate hikes may be needed this year to cool things down. But today's result is simply not compatible with higher interest rates. So the Aussie dollar took a dive off the 1 metre springboard, down from 65.7 to 65.2 US cents tonight. Without record levels of immigration, the fall would have been much bigger. In fact, per-person retail sales have fallen 6.5% in 2 years. And the only category of retail to see increased sales in March was food. Everything else fell, with clothing and footwear down a whopping 4.3%. And actually, food is the only sort of retail that's been rising for the past 2 years, ever since the Reserve Bank started hiking rates. And food shopping is now levelling off as well. The Coles latest quarterly sales figures, though, showed that supermarket sales are up 5.1% and online shopping up an amazing 35%. But investors weren't that impressed and marked Coles shares down a bit, and the market as a whole went up thanks to another day of bank buying. In New York last night, Tesla shares shot up 15% after Elon Musk went to China and cleared a regulatory hurdle for its full self-driving technology and did a deal with internet giant Baidu for the mapping and navigation for it. Commodity markets saw falls by iron ore and oil, rises by gold and copper. And finally, a postscript to last week's inflation data. The CPI has fallen with higher interest rates, but look what's happened to insurance as a result of climate change. And that's finance.